Hey guys, welcome back to Smart Wallet and Me, where financial wisdom really matters. Today I want to bring you guys another stock that I just researched. It's called Enterprise Products Partners, or the ticker symbol is EPD. And this is something that I really enjoyed researching because it is another energy stock, and it provides services to producers and consumers of natural gas liquids, crude oil, petrochemicals, and refined products. The company operates through four segments: NGL pipelines and services, crude oil pipelines and services, natural gas pipelines, and petrochemical and refined product services. Anyways, you guys can go and read about this stock and see what their sector is. They produce natural gas and they store natural gas as well. So the stock is currently trading at $17.49. And I just want to do a little research on this to show you guys what I think the stock is going to do. For my high estimate, low estimate, and the average estimate, I'll show you guys how I got these totals. And I'm going to do this right now. So my earnings per share is $2.09 for the year 2021. And I have a growth surprise rate of 0%, which I think that they've always been consistent. Lately, they have been negative. Their earnings have fallen down a little bit because a lot of the economies have been shut down and locked down, and oil prices have come down. And I think that once this whole coronavirus situation eases off a little bit, I think there will be some improvement in the long run. I know in the short term, there's a lot of lockdowns in Europe and other parts of the world. And there's going to be more downward pressure on this stock because a lot of these energy consuming companies are not requesting, a lot of energy right now. So there's a lot of downward pressure on this for the short term. But I think in the long term, after we're done with this coronavirus, I think we should see more upward pressure coming out, and it should be breaking out even further. So that's why I put a growth surprise rate of 0%. So let's go take a look at Yahoo here and see where I got these from. My forward PE ratio is 9. The actual earnings history you can see here based on the analyst of 21 analysts saying that the average is $1.91 and the low estimate is 172 and the high is 209. So that's where I got these numbers from. And if you look at the earnings history, you can see that there really is not a lot of positive news when it comes to 2019. Things were slowing down. And then the first quarter, there was a big surprise. There was a jump of being the actual was 61 cents versus 52 cents for the first quarter. So there was a big surprise of 9 cents. And then the second quarter, there was a little bit of a disappointment of 1 penny from 48 to actually 47, which was a 2.1% disappointment. So the next actual earnings report is going to be Wednesday, October 28, which is going to be coming up very soon. So be on the lookout for that for this coming stock. I just put 0% of surprise growth rate just to be more conservative. So we can see that the earnings per share should be 209 of where the estimates are based on these analysts. And with the P ratio, forward P ratio of 9, I'm coming up to 1881 and 7% growth from where we are currently. And then my low estimate would be 1548, unfortunately, because their estimates is 172 with the P ratio of 9. So that's a negative 13%. So we could possibly go down even more. If there's more lockdowns and more downward pressure, we could see 1548 again. And the average is $17.15, which is again a negative 2% from where we are right now. However, what really gets me interested in this stock is the fact that they have a high dividend yield of 10.4%. And I just did a video yesterday discussing what to look out for whenever you decide to buy any stocks that pay out any dividends. And don't just look at this number, the 10.4%, even though that looks very interesting and very high. You need to really look at more factors than that. And you need to look at the actual debt ratio, which right now is 1.05. Anything below 1 means that the company has more debt than assets and or equity. And in this case, it's greater than 1. It's 1.05, which means that they have more assets than debt. So that's a very positive thing for this company. And also, if you look at the dividend growth, It's 21 years, guys. They've been paying dividends for 21 years, and the 5-year growth rate is 4.18% again, which is very high. The only thing that gets me a little bit concerned is this payout ratio of 86.36%. It's a little bit too high. I want to see this below 60% if possible. I don't like to see this go over 60% because then it puts a lot of strain on the company to pay out these dividends. But they've been doing it for 21 years, and their dividends have been growing. If you look here, from 1998 it was 45 cents. And right now it's $1.78. So they've been growing. They've been able to do it. However, with the coronavirus situation, I think there might be some more pressure on this stock in the short term, like I mentioned earlier. Looking at the chart here, the support level is 1706. The resistance is 2857 if they want to break out even more. The short term for this stock is bullish because it just broke out from the 200-day moving average. The 50-day moving average is around 1749, and the RSI is 61. The money flow is 65, which to me is showing that this is getting a little bit overbought. Anything over 80 would be overbought. Anything below 20 would be oversold. And it looks like a lot of people are buying this stock right now. Maybe in anticipation of their earnings report. Maybe it's going to be higher than what the analysts are saying. We don't know. And the momentum right now is at 2, which is pretty good. It's very, very strong. So there was a big drop right here because of the coronavirus, and the energy sector just took a big hit. And they've been paying dividends consistently every quarter. So that's the one good thing about this stock. They've been paying for 21 years. It has a high payout ratio, a high dividend yield as well, and their debt to equity ratio is very good. So it's something to look into. I really like this stock. Let me know what your thoughts are, and please leave your comments down below. I will see you guys in the next video. Thanks for watching.